So, have you been looking into Blue Jet Healthcare? I can definitely see why. Their recent performance, well, it's been absolutely stellar.
Yeah.
But that high valuation, it's got to have you wondering, right, is this stock about to really take off, or has it already peaked? And that, my friend, is exactly what we're going to unpack today.
Yeah, Blue Jet Healthcare, it really is a fascinating case study. It's not, your typical big pharmaceutical giant pumping out those generic drugs.
Right.
They've really carved out this niche for themselves, focusing on contrast media intermediates and high-intensity sweeteners.
Now, contrast media intermediates, I get it. It might not sound like the most exciting thing in the world.
Right.
But these are actually essential components for CT scans and MRIs. And get this, Blue Jet's been in the game since 1968. 1968, starting with saccharin production.
Wow.
Talk about experience.
Yeah.
But really, it's the recent growth that's caught everyone's attention.
Yeah, precisely. Their year-on-year revenue growth, it hit a really astounding 90.9% in the third quarter of fiscal year 2025. To put that into perspective, imagine the entire Indian pharmaceutical market just going into overdrive.
Yeah.
And Blue Jet, they're leading the charge.
It's like they strapped a rocket to their profits.
Exactly.
But, even Elon Musk knows those rockets. They can sometimes, go a little off course. Speaking of profits, their December 2024 quarter, it was nothing short of remarkable. They brought in $3,184 million in revenue. Earnings before interest, taxes, depreciation, and amortization, EBITDA hit $1,240 million. And their profit after tax, Patty, it came in at a cool euro 990 million.
Wow.
Those are some seriously healthy numbers.
Absolutely. And this really begs the question, what is driving this phenomenal growth? It's not just random luck, right? Blue Jet's success, it can be attributed to, I think, a clever combination of factors. First, their specialization in contrast media intermediates. This creates a high barrier to entry for any would-be competitors. We're not talking about your run-of-the-mill chemicals here. These require, specialized knowledge, really sophisticated manufacturing processes, and stringent regulatory approvals. That means not just anyone can just jump into this market, right, and start competing with Blue Jet.
It's like having a secret recipe.
Exactly.
That's incredibly difficult to replicate. But it's not just about keeping competitors at bay, right? Mm-hmm. Blue Jet's also been strategically building these strong relationships with major players in the medical imaging field.
Exactly. They've secured these long-term contracts with multinational giants like GE Healthcare, Gerbit, and Bracco, and this really establishes them as a reliable and trusted supplier. These partnerships, they don't just, speak volumes about their reputation, they also provide a very stable revenue stream.
So they've got the expertise, this reputation, and the partnerships.
Yes.
This is starting to feel like they've got a winning formula here.
Yeah.
But there's also this global trend that's playing right into their hands, is there?
You're referring to the China Plus One strategy, right?
Yes.
Yeah, and it's a significant factor here because as global pharmaceutical companies, they look to diversify their supply chains away from China. India is emerging as a prime alternative, and Blue Jet, with its proven track record and capacity, it is perfectly positioned to capitalize on this shift. In fact, they've been actively investing in expanding their production capacity to meet this growing global demand. They recently reported a 79.3% increase in fixed assets, and a large chunk of that investment has been directed towards, building new manufacturing facilities and upgrading existing ones. This proactive approach, it signals their confidence in capturing a larger share of the global market.
So they're not just riding the wave, they're building a bigger surfboard.
Exactly.
This is starting to sound like a dream investment, but,
yeah.
But before we get too carried away, we need to take a closer look at their financials and address that elephant in the room, their valuation.
Indeed, while Blue Jet's performance is, undeniably impressive, the stock is currently trading at a price-to-earnings ratio of 58. This means investors are paying a premium for each rupee of earnings. They're banking on the expectation that their remarkable growth will continue. But is that really a safe bet?
The growth is remarkable, but isn't this level unsustainable in the long run? Some analysts are skeptical. How would you address those concerns?
Well, that's the million-dollar question, isn't it? Can Blue Jet maintain this, this breakneck pace? It's true that sustaining those high growth rates over the long term, well, it's a challenge for any company, really, especially in a competitive market like pharmaceuticals. However, there are several reasons why I do believe, actually, that Blue Jet is well positioned to navigate these waters.
Okay, I'm all ears. What makes you so confident in their ability to keep this momentum going?
First, their strategic focus, right, on niche markets with those high entry barriers. Well, this gives them, I think, a significant competitive advantage. You see, it's much harder for new players to muscle their way into these specialized areas. They also have a proven track record of innovation. They're constantly investing in research and development to expand their product portfolio and stay ahead of the curve. For instance, they're currently developing next generation contrast media that are even safer and more effective. This commitment to innovation ensures they're not just relying on their existing products.
Right.
They're continuously evolving to meet future market demands.
So they're not resting on their laurels.
Yeah.
They're actively looking for ways to stay ahead of the game. That's reassuring. But what about the macroeconomic factors? I mean, we all know that interest rates in India are relatively high right now. Could that put a damper on their growth plans?
Well, that's a valid concern, but here's where Blue Jet's financial prudence really shines. Remember, they're a debt-free company. This gives them incredible flexibility and resilience in a high interest rate environment. They're not burdened by, hefty interest payments, which means they have more resources to reinvest in growth opportunities and weather any economic storms that might come their way.
That debt-free status is a huge advantage, especially in these uncertain times. So we've got strong fundamentals, a robust growth strategy, and a solid financial foundation. But what's the market sentiment saying? What are the technical indicators telling us about Blue Jet stock?
From a technical analysis perspective, well, the stock is currently trading near its 52-week high, and this generally indicates strong positive momentum. The Relative Strength Index, or RSI, it's hovering around 64.83. This suggests the stock is not yet overbought. And the Moving Average Convergence Divergence, or MAZ, is at 30.09. This further confirms the bullish trend.
For those of us who don't speak fluent technical analysis, could you break down what those indicators actually mean and why they're important in this context?
Sure. The RSI, it essentially measures the speed and magnitude of recent price changes, right? It's to evaluate overbought or oversold conditions. A reading above 70 is generally considered overbought, while a reading below 30, that suggests oversold. So at 64.83, Blue Jet's RSI suggests there's still some room for upward movement before hitting that overbought territory.
Got it. So no flashing red lights there. What about the MEC-ED?
The MEC-ED is a trend-following momentum indicator. It shows the relationship between two moving averages of prices. A bullish signal, that occurs when the MEC-ED line crosses above its signal line, and that's exactly what we're seeing with Blue Jet. This reinforces the positive momentum indicated by the stock's proximity to its 52-week high.
Okay, so the technical indicators are painting a pretty optimistic picture. But being so close to its 52-week high, doesn't that also increase the risk of a potential price correction?
That's always a possibility. Even the most promising stocks experience these periods of consolidation or pullbacks. It's the nature of the market. Investors might choose to take profits off the table. This could lead to a temporary dip in price. However, if the underlying fundamentals, they remain strong, well, these corrections are often seen as buying opportunities for those who believe in the company's long-term potential.
So it's like taking a breather before the next leg of the race. It's not necessarily a sign of weakness, but rather a natural part of the growth cycle.
Exactly. And it's important to remember that technical analysis, it's just one piece of the puzzle. It should always be considered in conjunction with a thorough understanding of the company's fundamentals, its competitive landscape, and the overall market conditions.
All right. So we've examined Blue Jet's impressive growth story, their strategic advantages, their sound financials, and even the technical signals. But at the end of the day, our listener wants to know, is Blue Jet Healthcare a buy, a hold, or a sell? What's your verdict?
Well, that's the million-dollar question, and it's not a simple one to answer. There's no doubt that Blue Jet presents, a compelling investment opportunity. Their strong fundamentals, their innovative spirit, and strategic positioning in a growing market make them a force to be reckoned with. However, that high valuation does give me pause. It suggests the market is already pricing in a lot of their future growth potential.
So for those who are already holding Blue Jet stock, would you recommend holding on to their shares or considering taking some profits off the table?
Well, that depends on their individual investment goals and risk tolerance, doesn't it? If they're comfortable with the risk and believe in the company's long-term prospects, well, holding onto their shares could be a good strategy. However, if they're concerned about the potential for a price correction or are looking to, lock in some gains, trimming their position might be a prudent move.
And for those who are considering investing in Blue Jet for the first time, what would your advice be? Jump in with both feet or tread cautiously.
I'd advise a more cautious approach for new investors. While the upside potential is undeniable, that high valuation, it does carry a certain level of risk. A phased investment strategy might be a good option, gradually building a position over time, especially if the market presents any dips or pullbacks.
So dip your toes in the water, so to speak, before taking the full plunge. That makes sense. It's all about finding that balance, right, between maximizing your potential returns and managing risk. So let's recap a little bit. What have we learned today about Blue Jet Healthcare, just to kind of give our listener a clear takeaway?
Sure. Well, we started by, exploring their remarkable recent performance. Their revenue has been, really skyrocketing, and their profitability is strong. This success, it's driven by, I think, their strategic focus on these niche markets like contrast media intermediates, these specialized products. Well, they create these high entry barriers, giving Blue Jet, a real competitive edge.
And they're not just relying on their existing products either, are they? They're actively investing in R&D to create those next generation solutions, ensuring they stay, ahead of the innovation curve.
Right. Their strong relationships with, global healthcare giants like GE Healthcare and Bracco. Well, this further solidifies their position, as a reliable and trusted supplier.
Yeah.
And let's not forget about the China Plus One trend. This is really creating a tailwind for Indian pharmaceutical companies like Blue Jet as global companies diversify those supply chains.
But we also have to acknowledge, right, that their impressive performance, well, it's led to a pretty high valuation. Investors are clearly optimistic about Blue Jet's future, but that optimism, it is reflected in the current stock price.
Yeah, exactly. And this creates a dilemma, for potential investors. Is the market getting ahead of itself, or is Blue Jet truly a company that can deliver, sustained growth and justify its premium valuation?
That's the question. That's the question our listener needs to grapple with. We've provided the insights, we've analyzed the data and explored both the opportunities and the risks. Now it's up to them, right, to weigh these factors and make an informed decision that aligns with their own investment goals and risk tolerance.
Investing, it's never a one-size-fits-all endeavor. It's a journey of continuous learning, research, and careful consideration. And while we shed some light on Blue Jet Healthcare today, it's essential for our listener to continue their own due diligence. Dig deeper into the company's financials, really understand that competitive landscape, and stay informed about those broader market trends that could impact their investment.
We really hope this deep dive has equipped our listener with, the knowledge and the insights that they need to navigate this exciting and sometimes complex world of investing. Remember, every investment decision, it carries a degree of uncertainty, but informed decisions backed by, solid research and careful analysis, well, those are the key to successful investing. So as you continue your exploration of Blue Jet Healthcare, consider the information that we've discussed today, but always do your own homework. Trust your instincts and never be afraid to ask questions.
Well said. Happy investing.
Thanks for joining us.